Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar bears paws and grunts loudly as they defend the crucial level of the 60-day moving average, which still is seen around 73.14. No doubt any challenges towards that region would find good supply, I expect, and see the market eventually take on the challenge to the downside. Now, the support at present is at 72.25, and a break beneath there would give further scope to a target of 71.65 and reassess from there. Looking on to the euro, the market still awaits confirmation to the bearish outside range day. At present, the market is looking towards a support level, which comes in at 116.90 to 117.20. Now, a break beneath there would give further scope to the downside and target the region of 115.20-30. Looking to the top side, the market still sees resistance around the region of 117.95 to 118.20. And only above there, 118.20 would negate the outside range day. And also the bearish view, as no doubt the dollar index would have fallen further. But one thing to note is tomorrow morning at 4 a.m. is the FOMC, or should I say the Federal Open Market Committee, as it begins its two-day monetary policy meeting. With the market priced in 25 basis points interest rate rise, the event will be closely watched to see what the statement will reveal to whether the central bank will provide any clues to where the monetary policy will be heading over the next coming months and into next year. So far, I believe the market is penciled in a rate hike for December, and as I mentioned, 25 basis points for tomorrow morning. Now, they announce it in Sydney at 4 a.m. So for some of you that will be up and trading at that time in the morning, keep your eye out for the Fed to see if it does deliver 25 basis points rate rise, and does it lock in December as the fourth rate hike for this year. The dollar yen is nudging higher, and as you can see at the moment, is still looking for a potential climb now to 113.35 to 55. The market is slowly clawing its way to the upside. I don't have a view at these levels. ADX is clearly overheating as it gets to the 55 level, and 60 is also known as a potential top out point for the ADX. The RSI is also overbought, and you can see last time we got here there was a bit of divergence back here. None this time though, but I do expect to see something along the lines of these candles coming back into play, and it could be just the FOMC to trigger that move. Nevertheless, if you are trading from alongside, I do recommend to raise your stops and also to look from 113.35 to 55 back to 112.45. Well, the pound managed to claw its way higher overnight, but still, as you can see, is holding underneath this support that now is a trend at the level coming in around 131.30. Now it still needs to break beneath the 130.60-75 level to support further weakness, but nevertheless the market is currently capped by this support, as you can see here, and presently around 131. I would say roughly around 131.90 to 132.70. You can see from there if the market can push higher, but I do expect 132.60-70 to cap. If it does turn around sharply, the market will probably drop back towards the support with 130.60 to 128.40.80. But it is surprising at the moment that the bulls are ignoring the UK Prime Minister's latest Brexit comments after delivering overnight, and she reiterated that a no Brexit deal would be better than a deal, and explained that any deal that breaks up the integrity of the UK will be considered as a bad deal. So let's see how it plays out. Gold isn't going anywhere. It hasn't done over the last few days since the rejection of around 1,212. I still believe this sideways pattern could possibly break down. Therefore, do be on your guard if you see the market fall further and take out 89. It could drop down towards 60. And to wrap up with oil, well, the market is a little bit hesitant as it gets towards that level of 73.15.30, and therefore could see the market back away sharply soon. I'm in view to sell towards that region, as back in July and June, the market clearly rejected the $73 barrel handle. So therefore, I do expect to see the weakness to return, and most probably look towards the region that now comes in roughly around the initial support, that is, at 71.60 down towards 70.80. Now from 70.80 would expose a region of 69.20. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.